Hey there, what's going on? Chris Cervantez, eHomes, coming at you with the monthly market update for the city of Covina for the month of October. So prices are down, and I'm going to elaborate on that, but I wanted to let you know that things are changing, and I think it's expected, but let's get into that in a bit. So we're going to start from the top and head all the way down. So the active inventory in all of Covina is 77 homes on the market. 77 homes, it's actually much higher than it has been in recent months. But nonetheless, I think, and this is something that I've been echoing in many previous updates, is that we need more homes. Because if you really pare it down to from the condos versus even homes that have certain criteria in the upper range, the upper price point, there's really not a lot for sale, comparatively speaking. So 77 homes, 38 homes in escrow right now, and we have 38 homes that have closed in the last 30 days. Compare that to 55 this time last year, we're down 30%. It's a reoccurring trend that we've been observing for multiple cities around. We're down between 20 and 30% in the San Gabriel Valley area. A new metric that I've been tracking here lately is the list price to sales price ratio. In Covina for the last 30 days, we're looking at 1.09% below. So that means whatever the sellers on average have listed for, you can expect about 1.09% below the asking price. Compare that to this time last year, Covina sellers were getting 4.7% above the asking price. So that's a pretty substantial swing of almost 6%, 5.79. I think that's a trend that's going to continue as these interest rates tick up, which we'll get to next. So the median sales price, and this is what I opened up with. The median sales price in Covina is at $717, so $717,000. That is down 2.18% year over year. So that's the first time I've seen year over year sales price decreases for all the cities that I focus on in the area. I'm seeing price decreases from January, February, March to current data, but I haven't seen year over year data to reflect the negative sales price. I wouldn't be surprised again if this is going to, not if, I wouldn't be surprised that this is going to be a continuing trend as the year ends, just due to the interest rates. So the absorption rate, or I like to call the temperature of the market, rate is at 1.86. So we have 1.86 months of inventory in Covina right now. That's almost triple from where we were at this time last year. Again, a balanced market is between 4 and 6 months. So we still have a long way to go before we get to a balanced market. Now, let's just quickly talk about the interest rates. With interest rates being at 7%, I have some of my associates that are claiming they think the interest rates are going to hit 9, which would be pretty incredibly bad, but nonetheless, I wouldn't be surprised if at the end of the year we finish up with being in that low to mid 7 range. Comparatively speaking, if you compare this time last year, buyers were still obtaining 3% mortgages, 30-year fixed mortgages. So for interest rates to go from 3% to 7.5%, it's not great. And yet at the same time, even if I got pretty deep in the weeds with a couple of my clients recently, if prices come down by 5%, let's say they're at 717 now and they slip down 5%, even if rates continue to do what they're doing, and I think that they're going to continue to go up, I wouldn't be surprised if we see the 8% in the first quarter, second quarter of next year. So in the event that rates continue to go up, the bottom line is that mortgage payments are going to be higher than what they are today. So if you're a buyer listening to this and trying to time the market, you should probably just buy. If the family fits in this current home, your job is stable, it probably makes sense. If you're trying to reduce your monthly mortgage payment as low as possible, it might make sense to buy now. So that's that. But the interest rates are a big driving factor in our current market. The average days on market right now is 47 days on the market compared to 16 days last year. So that's almost 3 times as long as it's taking to get a home sold compared to last year. which again, it is what it is. Highest sale, lowest sale. 1478 East Holt Avenue in Covina. The list price was $3.1 million. Sales price was $3,010,000. This was a unique property. It was right there off the 10 freeway. Once you get off on Holt, you make a little right, and it's a lot of cool equestrian property. That one was 7.6 acres, and based on what the listing was saying, it could be subdivided into some separate parcels, and I can assure you that's why it sold, because the house itself was only 3,600 square feet. It was nothing to write home about. I think it was a development play, and that's why the sellers were able to get such a great price for it, so congrats to them. The lowest sales price was 4846 South North Grand Avenue, Unit C. So this was an interesting one because this kind of bumped the current trend. It sold in 13 days. It actually sold above the asking price, so they priced it well. They priced it at $475 to go to market. They ended up selling for $500. So they sold $25,000 above the asking price. It was only 1,052 square feet, a 2-bedroom, 2-bath, pretty dated inside, but it's a great location, 2-car attached garage for a townhome. For that purchase price, it was a score for them. So I'm curious to hear what you think. I think that rates are going to continue to go up, but I'm curious, leave in the comments below. I'd love to hear your take on what's going to happen here in the last 3 months of the market, 3 months of the year, and I'd be interested to hear what you have to say. So thanks so much for watching. Take care. Talk soon.